Right, so good afternoon, everyone. May I introduce myself again? My name is Danapo Chomsangchok. You can call me DC, D for Delta and C for Charlie. And I am a legal tax consultant at Siam Legal. And today, what I'm going to discuss with you guys is about taxations of foreigners who live in Thailand or who come to Thailand to do some sort of business. So before we begin, let's move on to the agenda of this seminar. So here are the questions that we are going to answer. So at the end of this seminar, you will be able to answer these questions yourself. So the first questions that we are going to look at is, do foreigners need to pay tax in Thailand? Because you may think that you live in Thailand, you have to pay tax in Thailand, but that is not always the case. And the second one that we are going to look at is, how do foreigners pay tax in Thailand? Do we have to file tax return at the end of the tax year? Or do we have just to wait and the payer of the income will do it for us? That is what we are going to look at in the second one. And the third one is, I will show you how to calculate your tax liability. And if time permits, we will look at the LTL visa and its tax benefits, which I believe Kun Art has already done in the morning session. Right, so let's move on to the first one. Do foreigners need to pay tax in Thailand? Well, Thailand is the same as most of the countries which tax people on two main rules. The first one is so-called the source rule, and the second one is so-called the residence rule. Under the source rule, income from sources within Thailand is subject to tax in Thailand, regardless of whether it is paid inside or outside the country. And when I talk about sources within Thailand, I mean, for example, you may have a post or you may work in Thailand. For example, you may be an employee of a company in Thailand and you receive salary. Then that salary is subject to Thai tax because you have a post or you worked in Thailand. In addition to that, if you carry on some sort of business in Thailand, for example, you may open a jewelry shop and then you have an income from your business is also taxed in Thailand as well. And the third one is quite tricky because if you are an employee of a company in Thailand and your company send you to another country to work, even though you're working outside Thailand, you still have to pay tax in Thailand if the company pay you that salary. So this is the income from business of employers in Thailand. And the last one is income from property situated in Thailand. This is the case where, for example, you have a condominium in Thailand and then you rent it to someone, you let it to someone, and then you receive rent. That rent is also taxed in Thailand as well. So this is the source rule. The second rule is the residence rule. Under this rule, income from sources outside Thailand is also taxed in Thailand if the two following conditions are met. The first one is you have to be a resident of Thailand, and a person becomes a resident of Thailand if he resides in Thailand for a total period of 180 days or more in any tax year. That is the first criteria. The second requirement is that you have to bring that income back to the country. So as long as you reside in Thailand for 180 days, but you don't bring that income back to Thailand, then there won't be any tax. However, in the past, here's the examples of sources outside Thailand. For example, you may go out to for example, to UK to work and you receive a salary from a company in the UK, you also have to pay tax in Thailand if you are a resident of Thailand and you bring that income back to Thailand, okay? Or you may go to the UK to run like a Thai restaurant, and then you receive income. That income is also taxed in Thailand as well if you bring that income into Thailand and you are a resident of Thailand. And the third one, for example, if you, go to the UK and you have a car and then you later sell it out to someone else, you receive that income from the sales. That income is also subject to Thai tax. In the past, the Revenue Department took the view that the income must be remitted to Thailand in the same year it was derived for it to be taxed. For example, in the past, if you received an income in the 2023 tax year and you didn't bring it back to Thailand in that particular year, there would be no tax. That is the positions of the revenue in the past. However, the revenue has just changed its position since the 1st of January 2024, which raises concern among foreigners. According to the new position of the Revenue Department, foreign source income is taxed when it's remitted to Thailand, regardless of whether it is brought into Thailand in the same year it was earned. So from the 1st of January 2024, if you have an income from source outside Thailand, and then you bring it back to Thailand in whatever tax year, that income must be taxed in Thailand. And that is the new stance of the Revenue Department. So here is the summary of what it's all about: taxations of foreign income from foreign sourced income. So basically, the point is, if you earn an income from January 2024, and then you are a resident of Thailand in any tax year, in the tax year that you bring that income back, that income is subject to Thai tax. I'll give you some example. For example, Mr. A stay in Thailand for a total of 200 days during the 2023 tax year, and he had income from property situated abroad. For example, he leased his condominium in that tax year, in the 2023 tax year. If he transferred the income to a bank account in Thailand during that tax year, in 2024 tax year, the income won't be subject to any tax in Thailand. However, if Mr. A stay in Thailand for a total of 200 days in 2024 tax year, and he had the income from leasing property during that tax year, even if he transferred the income back to Thailand in the 2025 tax year, that income has to be taxed in Thailand. This is how the new rules apply. However, as I said, this is just the revenue positions of interpreting tax legislation, because the law itself doesn't say what the revenue says. So basically, this interpretation may be challenged by the taxpayer who doesn't want to pay tax according to the new interpretation. So if you bring this one to the tax court, if you guys in this room would like to be the representative of, the foreigners communities in Thailand, you can bring the case to the court to decide. And according to the principles of interpreting tax law, if the term in the tax law is ambiguous, you have to decide in favor of the taxpayers. So in this particular case, because the legislation itself doesn't clearly say that you have to bring the income in the same year or in the subsequent years, it is likely that the taxpayer may win the case in this particular one. Okay, so this is quite interesting. I'm more than happy to help you guys with this one if you would like to bring the case to the court.
Let's do it.
Okay. Right, so you now understand how the rules work, right? So the situation is like this. If two countries that tax income under the source rule, so there will be no problem because you just tax income that arises in your territory. However, the problem will arise if you're taxing income by using different rules. For example, one country use the source rule that tax income that arises in the country, and another country tax their income on the residence rule. So in this particular case, one income is taxed in one country, and then one is brought to another country, it will be subject to tax again. So what happens is you get double taxation. So one income, you pay tax twice. So do you really have to pay tax twice? The answer may be yes, or the answer may be not. It depends on whether your country has a tax treaty with Thailand or not. So this is where the double taxation agreement comes into play to eliminate double taxation as its name goes. And currently, Thailand has about 61 double tax treaties with countries around the world. So you may have a look if your country, your home country is one of the countries on this list. So if your country has a tax treaty with Thailand, what will happen? Well, the mechanism of the DTA is that it will eliminate double taxation through process. The first method is one state have to give up its taxing right, so it has no right to tax you. That is the exemption method. And the second method is the credit method. This is the case where two states would like to tax your income. However, one state, after taxing the income, the other state is obliged to give a tax credit, which you can use to offset your tax liable in another country. To give you some examples, let's say you are a resident of Canada. If you are a resident of Thailand because you stay in Thailand for 180 days, but you receive income in form of pension from Canada. Canada will normally tax you on that pension because you have income from source from the country. But because you are a Thai resident, you will also be taxed because you are a resident of Thailand. So in this case, if you look at the Article 18 of the DTA, you can see that it's a pension which arises in Canada and paid to residents of Thailand shall be taxable only in Canada. What does it mean? It means that if you are taxed in Canada already, you won't be taxed in Thailand because the tax treaty only permits Canada to tax you in this case. So your pension will be tax-free if it's brought to Thailand because Thailand has no right to tax in this case. Okay? Or to look at another example. For example, if you have pension, you are an Australian guy who lives in Thailand for a long time and you receive pension from Australia. Well, because you are residents of Thailand, the DTA between Thailand and Australia say, well, pension paid to a resident of Thailand, it shall be taxable only in Thailand. What does it mean? It means that you will be taxed only in Thailand, but you won't be taxed in Australia So Australia has no right to withhold your pension. This is how double tax treaty comes into play to help you lessen your tax liability. Because if it is the duties of the taxpayer to claim the treaty benefits, it's not the duties of the revenue department. So if you have a right, but you don't claim for it, you don't get any tax benefit. That is how the exemption method works. In terms of the tax credit methods, as I say, you have to pay income in one country, and then you use the income as the tax credit to offset tax liabilities in Thailand. For example, like if you are a resident of France, if you come from France and then you become a resident of Thailand because you stay in Thailand for a very long time, and then you receive dividends from a company which is a resident of France, then the income may be taxed in Thailand. So Thailand will normally impose tax on the dividend because you have an income from property situated abroad, which is your shares in the French company. However, when French tax authorities know this, they're okay, you've got the dividends, the payer of the dividend have to withhold the tax. And then once you bring that income back to Thailand, you will also be subject to Thai tax as well. However, because you have already paid tax in France, you can then use that credit to offset the tax liabilities in Thailand to reduce your tax. And that is how the tax credit method works. So this is another way of lessen your tax liability.
Sorry, what kind of reduction? Like, you see, you can reduce the tax?
Yes.
Like by how much?
By the credits. So if you pay tax in France, then they will give you the tax certificate and you bring it to Thailand to claim for the tax credit. Right, so now you understand how you're going to tax in Thailand or not. Then the next questions that I will be looking at and we will show you is, how does a foreigner pay tax in Thailand? Well, basically Thailand uses three methods of tax collection. The first one is the self-assessment method. You, a taxpayer, submit your tax return at the end of the tax year. And the second one is the withholding tax. When the payer pays you your income, they have to withhold your tax, an amount prescribed by law. And the third one is the one that everybody don't want to pay with this method, is assessment by the tax authority. This will happen when you, for example, you don't file a tax return, or you filed your tax return but you didn't do it correctly. So you will face the assessment by the tax authority. But in this session, I'm going to talk about just only the self-assessment due to the time limitation. In terms of self-assessment, this one is quite long, but I will just summarize to you that basically if you are a foreigner and then if you have income either from source outside Thailand or either from source within Thailand, you have to submit your tax return, reporting all of your income that is taxable. If in case you have no spouse and your income exceeds 60,000 baht, then you have to submit the tax return. But if you have no spouse, but you only have one type of income, which is the income from employment, you have just only salary, then your income must exceed 120,000 baht. You have to submit your tax return. And this rule applies to Thai people as well. But in case you have a spouse, and your income exceeds 120,000 baht, you have to submit a tax return. But if you have a spouse, but you have only income from category 1, which is an employment income, then if your income exceeds 220,000 baht, you have to submit your tax return. And the deadline is on or before the 31st of March of every year. This is the deadline. If you paid it lately, you will be fined, and there will be some surcharge and stuff coming, which will cost you a lot. So it's recommended you pay it on time. In addition to an annual tax return, if you have a certain type of income, you also have to file what is called a mid-year tax return. These incomes include income, for example, from rent of property. If you if you let someone your condominium, you also have to file a mid-year tax return. Or you have income from professional fees, for example, you are an accountant. Or if you have business income, you sell goods or you provide services in a commercial manner, you also have to file this tax return. So you will be filing 2 tax returns if you have certain types of income, which I'm going to show you which one. And for this one, for the mid-year tax return, you have to file it within September of every tax year. Okay, within September of every tax year. Right. For foreigners who are liable to tax, what they have to do is they have to get the taxpayer identification number. It is necessary because you will use this number to pay tax in Thailand. And you are required to get it within 60 days from the date that you derive your income. Okay? So if you derive your first salary, you have 60 days to get your identification number. And this one will be used by your company when they pay income for you because they have to withhold your tax. And the document requires is just 2 things. A photocopy of your passport and a photocopy of your house registrations. And you can get it from the revenue office that you are domiciled. So just find the revenue office near you and then you get it from that. It's very important. Right, so now you understand that you have to submit a tax return at the end of the tax year or during the year. I'll show you how to calculate tax because you have to work it out. So basically, you start with your assessable income. So the income that you receive is called assessable income in the Thai revenue law. Then you lace it with exempt income. For example, you might get some sort of income that is not considered income by the revenue law. Then you lace with deductible expenditures, which I will show you what will you get for the deduction. Then you lace it with allowance. And then the last one is donation. You lace it with donations. Then you get the taxable amount. And then you multiply it with progressive tax rate because Thailand for personal income tax we use the progressive tax rate. And then you get the total tax that you have to pay. Now, in terms of assessable income, so Thailand classifies income into 8 categories. So category 1 to 8. The first one is generally involve income from employment. The second one involves income from work, like performed, that is not employment. The third one is copyright, goodwill, and any other rights of similar nature. The second one is income from dividends, rent, or you like staking cryptocurrency, it will go with the category 4. The fifth one is the rental. The sixth one is professional service fee. The seventh is construction service income. And the eighth one is other income. It's very important that you know what income that you get belongs to which category, because each category you are entitled to different deductions. In terms of the exempt income, is there any income that you can be exempted from tax in Thailand? For example, income from sales of a movable property acquired from inheritance. Let's say you have got a car that you received from your grandmother. You decided to sell it, so there will be no tax on that because it is an exempt amount. Or if you have income prescribed by the ministerial regulation as an exemption, then you can also be tax exempt from that. One of the things that I would like to show you is income from sources outside Thailand that derive from a resident of Thailand who holds the LTL visa. And you're classified as wealthy global citizen, or you be like wealthy pensioners or work from Thailand professionals, then these kind of income is exempt from tax in Thailand. So this is the privilege that the LTR gives to the taxpayer and the person who holds it. And here are the lists of expenditures that you are entitled to. As you can see that each category is entitled to different deductible expenditure. So you have to know which category your income belongs to so that you can deduct it correctly. Otherwise, there might be some sort of surcharge if you didn't file your tax return properly. And here are the lists of allowances. As you can see, for self-care, you are entitled to 60,000 baht per year for your personal allowances, which is quite low. But like, this is what the government gives to you, so you have to just take it. Even though it's like, it should be like higher, but like. And for the dependent spouse, you get 60,000 baht for 1 year. It's high, right? For 1 year, not 1 month. Yeah. And you also get allowances for your dependent parent, each for 30,000 baht. Yeah. But your parents must be at least 40 years old and lives in Thailand and have no more than 30,000 baht income. So there are some sort of conditions that you have to look at to get the allowances. But normally, like, people would get like self-care and dependent spouse.
It's for foreigner.
Yeah, it's the same for foreigners. Yeah. In addition to that, you can also entitle, so for example, insurance allowance. If you pay premiums for your insurance, you can also get deductions from that, for allowance from that, but not more than 100,000 baht. Or health care insurance for not more than 100,000 baht too.
So for every year?
Yeah, for every year, but these two must not exceed 100,000 baht. Oh, I think this one must be like 25. I'm sorry, for the mistake.
Is it
should
75 and 25
Yeah,
combined to be 100?
Yes.
Yeah.
And for example of investment, you're entitled, for example, if you pay for the retirement mutual fund, then you get, you can use it as an allowance to deduct from your assessable incomes as well. Also, if you make a donation, okay, you can get it, and 2 times deduction. And here is the progressive tax rate of Thai tax rate for personal income tax. So basically, you got exempt for your first net income for the 150,000 baht. You get an exemption. And then after that, you start paying tax. And here is an examples of what tax you're going to pay. For example, like if you earn like 5 million baht that year, you will face 265,000 baht, which is quite high. I mean, you may have to like consider like setting up a company or something. You have to do some kind of tax planning, otherwise you will face this one. So it's quite high. So the more you get, the more you pay, basically. Yeah. And in terms of LTR visa and its tax benefits, I think Kun Art has already covered it, so I'm just not gonna talk about it again. But basically, you get like 17% tax rate, flat rate, if you are considered a highly skilled professionals on the employment. And you get exemption if you are from income from source outside country, if you are considered wealthy global citizens or wealthy pensioners, or you are considered work from home, work from Thailand professionals under the LTR visa. Yeah, and that is it. So if you have any question in relation to what, yeah.
Let's say if I'm a foreigner and I'll just retire in Thailand and I do get incomes from foreign sources and stuff, right? And I stay over 180 days. And I'm not aware that I need to be, or I need to pay tax, basically. I'm not in the system for any reason.
For any reason, okay.
Will the revenue department, just, out of curiosity, will the revenue department comes and asks me to pay tax based on my cash flow?
Okay, so basically, recently the revenue has just issued a royal decree, which is about exchange of tax information and financial information. So basically, they might use this to exchange information with the countries that you have an income, and then they will exchange it. And once they know that, they may figure out that, okay, you have an income and you don't submit your tax return to us. Yeah.
How long it can take? How long it can take for them to?
For this one, I'm not sure because they have a lot to work on. I mean, due to these new the new way of interpretations that they decided to do.
So how can we go to court and challenge them on this?
So firstly, you have to, it has to be the case first, and then you have to appeal to the upper tier tribunal, tax tribunal. And then after that, once they decided that, okay, we will tax you, then you can bring the case to the court. You can't just go to the court directly. You have to appeal your case first, which means that it has to happen first.
You can't just proactively challenge this.
No. Yeah. So you have to appeal it first. You can't just go to the court.
Does Siam legal help with challenging?
But if you have the case, then
Is this a service that you provide?
Yeah, it's very interesting. I mean, I have to discuss with the team.
another question is, let's say I'm a Thai tax resident. I have parents who live overseas, for example, the States, and they hold U.S. citizenship. I then, theoretically speaking, they die, right? And I get house, cars, and then I sold all of those. I get more than 1 million USD, and I like to bring them back to Thailand. will I be paying both ends, or it depends on the source? Will that be based on my residence, or because the income is from overseas?
Yes.
Then I'm resident.
So yes.
Right. Two different things. Will I be paying taxes?
So because you are residents of Thailand, Thailand has a right to tax income from property situated abroad because you have an income from sales of your assets abroad. But that might fall within the exemption because it is a sale of, for example, if it is a movable property, then it's tax exempt, as you can see. But if it is an immovable property, it will be subject to tax. So it depends on the kind of assets that you
It doesn't matter
sell.
what year I bring it.
Yeah, from now on. And as I said, you can challenge the case to the court if you don't want to pay it.
That'll be a very long journey.
Yes, it is. And I believe that the revenue will like fight until the end of the finish line.
I mean, first of all, this is a great presentation, and I think it highlights really well, very clearly what we know. But correct me if I'm wrong, because my impression of this entire thing is that there's so many unknowns. We have no idea how they're even going to come after us, what documents they're going to ask for, how are we going to prove source of income. Is there any way, like, so it sounds to me that any Q&A between a client and any law firm is just speculation at this point,
Yes.
right?
Well,
There's no black and white. It sounds to me the only clear black and white is if you're not a tax resident, don't worry. If you hold the LTR, don't worry. But everything else, right now, it's just we're just making educated guesses.
yeah.
It's not clear.
So basically, this is the rules that they use, so they have a right to tax you, but whether they will tax you in practice is another matter. And that comes from the fact that if they have enough information of your, for example, financial things. So you are correct in terms of, yeah, we are on the speculations right now because, we don't know the case yet.
Yeah, just for example, let's say a foreigner wants to buy property in Thailand, right? And he transfers 30 million baht to buy property, right? Now, you would assume that he would then need to prove source of income.
Yeah.
So that to determine
Yes.
how much he has to pay.
Yes.
In general, you can probably say that. But in practice, what exact documents he has to show, what exact US agency he has to go to, none of that is known, right?
Yes.
You have no idea how to actually prove that.
How to.
Because they have not given any guidelines.
This is what I've been trying to ask from the revenue
'Cause I
department.
don't think even they know.
Yeah. Well, I believe like they want to start with like you have to declare it first. If you don't, if we figure it out later, you just will be in the problem and you will face with surcharge. So basically, the best way to do is you have to declare it if you have it. This is what I personally think the revenue have in their mind. For you to confess it first, to avoid the tax penalties that might happen.
I'm wondering how they're gonna track this 180 days if you're not employed in Thailand, if you don't work in Thailand, and how do they actually?
If you
how
are
do you
not,
become a tax resident here?
if you are not working,
If you are not working, if you just
So you
here
won't
and
become-
You spend like let's say 190 days, so you're tax resident, but how do they?
they will check from your passport. So once you stamped
Oh, yeah.
the passport, then you
Then-
start the
then-
day one.
yeah.
Yeah. So in practice, they check from your passport.
Do they check it?
Yeah.
And if you do have an accountant, that would be another
Yeah.
source of evidence, right?
Yes.
Let's say if I bring in 20,000, but I do travel back and forth, and each time I bring in 20,000 USD, then exchange it. I have somebody else do it for
Mhm.
me. My income will never be in the system under my name.
Yes,
It will be
it's
on
true.
the nominee side.
Yes.
Then I'll never catch me then, right?
Yes.
Just
just in that case.
That's how my client would ask.
Yeah.
That's the same questions I get asked, and like for me, I don't confirm, but I would say, oh, that's a smart thing to do.
Yes, and I think they will like, the revenue have to think about this one as well,
You
because
should hire us then.
When you say normally, doesn't it mean that person that you ask for a favor, they have to like handle the tax thing?
For example, like when I was back in the States and I bring in money, I usually bring in like 6,000 above, right? And I will carry cash on me.
yeah.
And I'll have somebody like exchange it for me. I'll never do it myself. Like I would ask my friends, families,
Yeah.
basically, and they exchange it in cash.
I think it's quite tricky questions because I think they are trying to follow the US models that they tax its
Right.
citizens, and yeah, I think in the future, like,
Well, it's already hard as it is for them to chase
Yeah,
the tide.
it's
right?
true.
And then let alone going with chasing other foreigners. But as long as it's on the paper,
Yeah.
you get freaked out.
yes,
I have a question.
yes,
You mentioned there are 3 ways they assess your tax, right?
yeah.
The first one is
Self-assessment,
And I was wondering, how do they do this? I mean, if it goes to step number 3, which is the assessment from the government,
yeah,
do they do it randomly or there's like a
randomly, yes. Because they have a department which works on this particular issue.
so it's a random?
They have kind of like set a bar that, okay, this year we need this kind of,
So let's say
you have to hit the, what is called,
Bottom line,
yeah,
so there's no way to tell if you are gonna
yes.
be flagged or not.
And I think that is why they try to enforce the exchange of information rules seriously. And that comes with the royal decree that they issued a couple of years ago.
conflict with the PDPA and global GDPR.
I don't think so, because there's also, they've done that because they have a tax treaty of exchange information between the state. So I think they will use that basis to legalize the royal decrees about exchange of information.
But I've seen a lot of people get taxed like years after.
Yeah.
That's like purple. But it takes years. You have to earn enough money
Yes.
for them to chase you.
Yes.
And then if you earn more than they expected, then they won't chase you.
Yes.
It's just, if you're in the middle class, then you get chased.
Yeah.
If you're in the upper wealthy class.
Yeah. So we normally like catch people with like large amount of money transferred to Thailand. Yes.
Because you have the source and how it linked, right?
Yes.
Oh, I'm bad. I shouldn't be discussing anything really small. So dodgy.
So I'm sure you guys at Siam Legal or everyone, you get this question all the time regarding tax. And I know that a lot of things are unknown. Do you guys have a template answer that you give that can give them some guidance, but also save yourself from a legal standpoint and kind of calm them down a bit? Like for example, a template answer I give is, okay, number 1, if you're not a tax resident, don't worry. Number 2, if you have the LTR, don't worry. Number 3, if those 2 don't apply, you might pay tax, but double taxation, you might get exempt or credited. But if you're concerned, talk to a lawyer, tax lawyer. That is a template answer I give. Do you guys give a template answer that's just a nice paragraph to shoot out to people as a default?
Do we have it?
No, we do same as you.
Yeah.
And DC just joined us recently, right? So before we used to send our client to tax advisor because as you know, is a legal company, we cannot write and give advice like that. So we always move to him. Now it might change because we have DC joining us, so we will transfer everything to him basically.
Yeah.
So right now it's too fresh for me to say.
Okay.
But yeah, we can. Sure, we will.
We're working very hard.
I understand that. I'm sure that the revenue department also do so.
Do you have to attempt it or something like that?
What I do is, as a student enterprise, what we do is we suggest our client to either go to our partner, the vendors, and of course KPMG to consult with the tax expert, because some of the things we say or write in writing can be used against us at the later stage. So to save ourselves from confirming any type of information that were not established by us or it involved many parties, we're not going to do it. So it's like ภาษาไทยเรียกปาดอะ It's like a drawing. Oh yeah.
I understand that.
Yeah, everyone sends the board to someone else.
And
Now,
then just pass the inquiries to others.
but you see now
It's very simple.
where you can send the board right now.
Well, if my client does have a case, I'll definitely put
Thank you.
Stanley on my top list.
Thank you.
I have a case to share. Because I don't want to get back to this client. He's asking me, what if he doesn't have a bank account in Thailand? Can he use credit card in Thailand and then avoid the income tax?
Credit card means those that were issued from overseas.
The receipts.
It's very hard to answer.
Based on my understanding, the answer is yes, because it's a form of remittance of the income to the country.
You don't,
But-
because if it's a foreign bank account, the credit goes to the foreign account, the foreign credit card provider, and you pay the balance abroad. It's as if you went traveling and you used a credit card to pay for expenses.
Then you
wherever
pay to the
So if I have a U.S. credit card that I'm using in Thailand, right? I'm using it, but the credit is posted in the American account, and then I'm paying that with my American dollars. It has nothing to do with Thailand. So that's a loophole.
it goes directly to
Yes.
okay.
If it's a U.S. credit card.
I just go to
Yeah.
Thai bank account.
The other interesting loophole is if you withdraw cash from an ATM. Because there's certain credit cards that you can withdraw cash and they don't charge you an ATM fee. So you can just do that every day under a certain amount. Let's say it's under 50,000. You can just do that every day.
But that's not real.
Yeah.
Yeah, foreign account.
There's no
It's not
case.
even a remittance.
There's
well,
no
it's a
case law on
It's
this.
a cash withdrawal.
There's no case law on this. It's based on
No, it's a
yeah, but like
potentially a loophole.
based on what I study with a tax professor who is also a tax judge in the tax court. He also says that the kind of things that you just talked about is also considered remittance to Thailand as well. But that is just his opinion. Yeah, but there's no like exactly case law in this particular
Well, the
case.
cash might be because you're holding the cash, but the credit card, it's not a remittance. You're paying for an expense. It's not
But that from your
remittance.
income as well. If you use that money from your income, it might be considered remittance to Thailand.
Unless you do withdraw
Yeah.
50,000 on a daily basis, like every day of the week.
Yeah, the revenue question like, where does this income come from?
That reports comes. But I don't think that we track any tax.
Yeah.
I don't think Thailand has that kind of system.
It'd probably be way low in the priority
Mhm.
pecking order.
Because now my client is asking if he can pay in cash to the landlords for rental. When he plans to, just like you said, plans to withdraw money from the ATM, from his credit card and pay rent to that one. So I'm not sure it is illegal. And I don't know what to say, to be honest.
Just for no email, you
your client might be smart enough to just record the
Yeah,
conversation.
but I don't call him. Just blink.
Just use different name.
But basically, as I say, yeah, I think it will be the last on the list of what they're looking for. They're looking for amount. And Thai family will make money overseas and bring it. This
As
the
long as it
particular
covers
policy, yes.
Then you can't tell the client that.
But we
Well,
cannot
the
say.
name was your name.
Dennis outside mentioned also another loophole if you bring it in as a donation to a Thai person. You can donate up to 10 million baht, whether it's your spouse or your nominee.
Yeah, that
Yeah.
is a kind of loophole.
Then I'll ask for donation then.
Like you give it to, it's not a kind of donation, like you give it to your,
But you need to declare it anyways.
you give it to your spouse in,
But when you give it to your spouse, it's not, it doesn't call donation, is it?
yeah, it's not called donation, but like you give it to your spouse on a special occasion,
Yeah.
then and then
Whether it's,
remit
or
it
maybe
back.
it's not spouse, maybe it's a donation to a person, a nominee.
I'm not sure about that one, because what I'm aware of,
It depends on the status of the person. If you're donating it to a child, then definitely not donation. Everything depends on the case.
I can start a nonprofit, guys.
That's why we bar those who hold a
You guys can-
non-volunteer visa to apply for Thailand privilege.
Yeah.
Because this is one of the things. A lot of companies do their
Oh,
due
yeah,
diligence
just the-
very, very
I have
tight on
Just do it,
non-profit organization.
mm-hmm.
Or I used to work for a company,
Yes.
a global company, and they, whatever we do, we conduct due diligence on the whole organization itself. Then even temples in Thailand, we do particular list of people in the organization before you even donate. I'm not sure if Thai government will be looking into those and sort of implement certain rules in terms of due diligence on
On the charitable organizations, right? For that one, I'm not sure if there's any policy.
capacity to do so.
Yeah, because they've got like, they're trying to use big like data analysis, like
It's too big.
yes,
We only even did-
because they send a lot of like tax officers from their department to study big data analysis in recent years. So I think that they might use it as their tool.
I'm just curious, like, I'm sure that this announcement has caused a lot of concern among chambers of commerce and so many organizations, and I'm sure they've probably somehow voiced these concerns to the government. I'm just curious if you know if they have taken any of this into consideration and are planning to clarify, or are they just so stubborn and just ignoring all concerns?
Well, as far as I know, I used to be a tax committee of the Thai Chamber of Commerce. So they're kind of like the president of the committee sent some feedback. I think he wrote an article on this, but I'm not sure if it's like officially sent on behalf of the Thai Chamber of Commerce to the Revenue Department. Sorry for the interruption. Please carry on.
I was just curious if the government has responded to any concerns, if you know.
Well, I think one of the responses of the government is the fact that they have just declared that the income that arises after the first of from the 1st of January 2024 onwards will be subject to tax. That is the latest announcement from the Revenue Department side to clarify what kind of income will be subject to tax under the new interpretations of law. Because previously there was no clarification on this, so most people are worried if my income from previous year might be taxed in Thailand.
So it won't be clear until we have a case, right? It won't be explained into details. break down into different categories until we have a case.
Yes.
A person encountered such a case or
Yes.
basically a real life situation example. Right?
But normally you can consult with the revenue government in writing, but it depends on whether they will give you the answers or not. Because sometimes you do consult, but you won't get the answer. Even unless you walk in, if it's some things which is, kind of like a big issue, they have to like consult with the head office of the revenue department. The regional office has no authority to determine the issue themselves.
Do you think they may delay
It made it
enforcement?
enforcement.
Yeah, do you think they delay enforcement of this for a year?
I'm not sure about this, I'm afraid. Yeah. Because it seems like they strongly hold the standpoint that they're going to tax on the worldwide income basis. So
Thomas is a tax consultant and I'm a financial consultant. We've been consulting Americans for 5 years in Thailand. Previously I was in Abu Dhabi and recruited to come here and work with Thomas. As Americans, we face international taxation no matter where we live or work and all those things. Typically, Thailand has had a tax treaty with the United States.
64
Yes.
countries.
64 countries, and we Thomas has a master's in international tax and finance, and we specialize in
The tax treaties.
the tax treaties and things like that. Thailand's, what we've experienced is that with the tax treaties relating to Americans, they've always been able to tax a non-federal retirement for an American. However, they were not doing it. But they are starting that now, as you're saying, January the 1st, they will start taxing those private pensions while they still retain, and Thomas can talk more about this.
I'm going to do a presentation. We're supposed to do a presentation, Ken? Okay, we're going to do a presentation.
Okay. Well, we just chatted, but anyway, the taxation stays in the state, so federal pension payments remain only taxable in the United States, not taxable in Thailand, while private pensions for Americans are taxable here. It's kind of the reverse for UK expats. Their public pensions are taxable. I'm Ken Brown. I work for Business Class Asia. Thomas and I am a financial consultant. I've lived in Thailand for 5 years. And basically, I was recruited to come here and work with Thomas. I was recruited from Abu Dhabi to address the expat issues, solutions for Americans, as Americans face already a lot of issues when living outside the United States. When Americans open accounts and things outside the United States, those financial institutions are required to do an extra lot of reporting for Americans. They have to already report our money back to the United States. So a lot of financial institutions incur an additional charge and don't really want to deal with Americans. So Thomas had shared that idea with my CEO. We're based out of Hong Kong, and we basically came up with some solutions to match up with Thomas, his tax advice. And I'll introduce you to Thomas Carden. I do a lot of introductions to Thomas because he doesn't really always say every little thing to me that matters to the clients when we sit down with them. But Thomas was actually the international rep for Jackson Hewitt, which is an American tax office. So he was the guy that handled all the different international questions that came up. So he was really abreast to international issues before he even moved outside the United States. He went on to get a master's in international tax and finance. So with that master's, it allows him to how we address these very issues that the Americans were facing with the tax treaty. So we have been dealing with tax treaties for the last 5 years for Americans and specialize in that. And now, given the new tax laws in Thailand, we are addressing them now, with other nationalities.
Okay, just actually out of curiosity, an interesting point of this, Ken Graham, what's your actual position? Partner with Siam Legal, and I graduated from the same law school out of San Diego. Coincidentally, we did not know each other before we both moved here to this. Although he has a JD, I have a Master's in International Tax Law through the same university. International Tax and Financial Service Law. The next one, okay. To Ken, okay, tax, okay. And what's the first slide? Okay. What we do primarily in American National Tax Advisors, we are the largest U.S.-centric tax law firm in Southeast Asia. We're several thousand clients. We have offices from Saudi Arabia all the way through Manila. We do anything that has a nexus with the United States, personal tax return, business tax returns, missing years, filing, correcting balance fees, disputing IRS educations. One of the keys of this is, and why we're kind of a leader in the new tax rules is, an American expat living overseas has to file a U.S. tax return no matter how long they're outside the country. UK citizens or Australians can rapidly lose their tax residency very quickly and not have to deal with anything back in in Australia or the UK. As an American, you're still filing a tax return if you're out 25 or 30 years later, unless you renounce your U.S. citizenship. Because of this, the complexity that occurs in that, we are an expert in using international tax treaties for all these different countries to this. And one of the things that, unfortunately, I didn't get to get to the earlier presentation, but I'm sure he mentioned, is that the Thai Tax Revenue Authority has said that they're going to honor tax treaties in these issues. Okay. Now, prior to this, on an individual basis, I'm not sure a Thai firm ever looked at a tax treaty except for a very rare occasion. We use those on a daily basis, and we do them for expats all over the world in different countries with this. Tax treaties are generally, how do I describe this, have the clarity of mud when you're trying to read them. They're not the most fun documents to read, but they're going to become more and more important with this. Let's go to the next. Okay, Thai Tax Revenue Code, Section 41, Paragraph 2, a person who receives a foreign source income resides in Thailand at least 180 days in a tax calendar year, person who enters into Thailand in 2024 and the subsequent years, per the case above, such an individual is obligated to disclose this income brought into Thailand when calculating the income tax rate for the calendar year. Okay, as I'm sure you guys discussed and know, prior to January 1st of this year, the old rule was in place that stated that if income was held by an individual more than a year at an outside account outside of Thailand, when it was brought into Thailand, it was considered savings. Okay, now this wasn't so much a loophole as it was a ship channel, in that everybody always just claimed all the money that was ever brought into Thailand was brought into Thailand as savings, and the revenue authorities here never did that. We actually had a client several years ago go into one office and say, hey, according to the tax treaty, you guys are supposed to tax me on this income. The Thai tax office actually said, and I quote, leave, we don't know how to do that with this. So the change into the remittance basis of taxation is huge. And one of the conflicting issues of this is the Thai revenue authorities aren't really sure what they're doing either on how to do this. Okay, one example of this, we had another client who, they were Thai nationals, but they worked in the US for a certain period of time, about 90 days. They brought that money back into Thailand within that calendar year, so we went back and got a foreign tax credit for them, okay? Because under the US-Thai tax treaty, Thailand is supposed to credit them for the taxes paid in the United States, okay? This was an issue of about $1,500 US, 45,000 baht, okay? We've been working with the Thai revenue authorities for about 15 months to get that one credit processed. They still are fighting because they can't determine in their systems how to credit it possibly. Okay, now inside Thailand, theoretically, there's about 140,000 Americans, somewhere between 90 and 140,000 Americans here, just Americans, and when these guys are having to do 90 to 100,000 of these things, chaos in the revenue department. This is the reason why I know that they're working on trying to put this into place, but there are two things that I don't think they're going to be able to do it this calendar year. I think they're going to be enforced this for francs, largely because two things. One, they don't have the infrastructure to handle that level of complexity just with Americans and several 100,000 other people at this particular point of other nationalities. And two, up until this point, anybody who's here on any type of visa, the elite visas and all these visas, retirement visas, marriage visas, has not been required to get a tax ID number, okay? How are they going to process tax returns for all these foreigners living over here with no tax ID number? This doesn't really get serious, in my opinion, until the Revenue Department says, when you're going to do your 90-day check-in, you're going to have to get a tax ID number to this. Now, I'm not faulting the Thai Revenue Department in this. The reality of this is the tax code that they had was not substantial enough to handle all the implications you're going to have on all of these different nationalities and tax treaties with this. This is literally thousands and thousands of pages of regulations that have to be written, and then you have the procedures that have to be put in place. They just have not had time to do this. So my opinion, they're probably going to push this out by a year. Again, I know they're working heavily on this, but they just don't have the facilities on this. And day by day as it rocks over, you're running into a situation of where they're just not going to be able to do it for a foreign national. They may be able to say for a local, yes, this is possible to do, a Thai national, but even then, as I said, 18 months now, 16 to 18 months on processing one foreign tax credit with it, they're still not finishing that process. We have, actually my staff goes back tomorrow for yet another meeting on processing one foreign tax credit. This is going to be several hundred thousand of these processes going through. Let me see what's the next slide here. Go through, I don't want to get too much. Okay. What's driving this? Okay, everybody familiar with what's called the OECD, Organization of Economic and Cooperation and Development? Our tax wonk, of course, is familiar with this. Okay, Thailand is very heavily trying to join the OECD. Okay, the OECD, I'm not going to say it's a cabal, but it's a group of nations that is getting together to try to further global economic cooperation around the world and thus lift everybody's economy up. Okay. In order to join the OECD has put pressure on them and wants certain things to come into play as far as economy. Thailand has been a little bit, I'm not going to say it's a rogue nation, but a little bit on how it does things on its own. Okay, most other countries around the world have moved to a global taxation system. Now, a global taxation system is you achieve that tax residency of 180 days in the country to this, you are taxed on your income around the world in that country, okay? Which means that if I'm earning income in the UK and I've got that income, I have to report that on my Thai tax return and pay tax on it potentially here in Thailand unless the tax treaty says one of two things, okay? One, it will give me credit for the taxes paid into the UK with it. So that means this is really important. This is the primary reason of the double tax treaties, is the escape against double taxation. Okay, double taxation means I get $100,000 of income in the UK. The UK then taxes me at 40%. I get $60,000 net. Okay. Now, if I were to come over to Thailand and there's no taxation agreement, I brought that $60,000 in, Thailand could then theoretically tax me at 30%, and I get a little bit over $42,000 on $100,000 of income. Okay, clear for everybody? Okay, so that's true double taxation, and it's heinous, and it means nobody would move money from country to country or invest in these various countries because your rate of investment goes way down when you're being double taxed. Okay, now tax treaties tend to do one of two things. They'll say that in particular cases, only the UK may tax this particular type of income. Generally, it's like, say, a pension income for somebody's retirement income. Thailand does not have the rights to tax this income at all. It will get reported on the tax return, but not taxable here. Only the UK has the rights to tax that pension. Or the taxes paid in the UK can be used to offset the liability here in Thailand. So if the UK charged at a tax rate of 40% and Thailand charged at a rate of 30%, Thailand would not tax that because more tax has been paid in the UK than in Thailand. However, if Thailand charges 40% and the UK charges 30%, what would happen on that $100,000 is the UK would charge $30,000, Thailand would charge $40,000, but they would credit the $30,000 and that person would write a check back here into Thailand for $10,000, okay? This is the basis of what tax treaties do on a case-by-case basis, okay? Now, secondarily to this, okay, about 13 years ago, a law passed in the United States called FATCA, the Foreign Account Tax Compliance Act. What this act did was it forced every international bank in the world to report the accounts from U.S. citizens or face very stiff fines with it, okay? And I mean to the point of millions and millions of dollars fines. And this is every financial institution in the globe, okay? Now, the U.S. was very successful at this, raised a lot of money, got compliant. A lot of hidden accounts suddenly came into existence, and people had to start paying tax on it. After that, a movement came called Common Reporting Standards, CRS, came into play, okay? CRS is sort of FATCA light, okay? But now, if a Thai national has an account in, say, Australia, that they weren't reporting into here, Australia has to tell Thailand where that account is being held by a Thai national, how much interest it is paying, and how much income it is being paid. So the wealthy Thai families who've had money overseas in all these different countries and have not been paying taxes on it, now can be reported. And this is one of the big incentives to move to global taxation, is these billions and billions of baht that are held overseas now can get identified, and as they move to global taxation and away from the remittance basis to this, that money will get reported into here and brought in and re-reported. Now, in my opinion, this was probably meant to go against the very large Thai families that were doing this, but we're talking about elite visa holders here. These people generally have money and wealth spread all around the world. Their situation is going to be very complex because all of that will have to be reported from around the globe and move into it. I dealt with a gentleman just this morning. He lives here part-time, but he has companies in 7 different countries. So now, as a U.S. citizen, he has to report all 7 of those companies in the U.S. And very soon, he'll have to report in all 7 countries and all 7 companies in countries around the world here as well. So his tax returns will probably be that thick each year. They used to be this thick. So this is the reporting level that everybody's getting into. The world's getting more and more complex very, very quickly.
So I'll just say that the Americans, we've faced with this since FATCA was passed. So we have the reporting requirement from the financial institutions, and Americans have a requirement that if they have $10,000 in one account or the sum of many accounts, that they have to report that back to the United States on a form called FBAR, Foreign Bank Account Reporting. So they're tracking our money, and even some of you may have experienced this when you've opened an account in Thailand, that you actually had to sign a W-9 form from the United States saying I'm not American. So that's how hard they track Americans' money when we live outside, and that's why we're so
all
busy.
Of that form all relates back to this.
Yeah.
That era of global bank secrecy you used to hear about is gone.
Thai's money now.
Heavily enforced. Where you are a resident will get reporting on where you hold a bank account anywhere in the world. You think Switzerland was the biggest bank secrecy country in the world? Anybody have a disagreement? Switzerland was the biggest bank secrecy country in the world? Totally wrong. It was the United States. The United States, prior to these agreements, if you were not a U.S. national, you could open up a bank account in the United States, and it would not be reported to anybody. No foreign government, and literally, if they subpoenaed the bank, they still could not find out that bank information. All of these rules and regulations have destroyed that and destroyed the Swiss bank secrecy rules.
So these two things go hand in hand with the new taxes. So now, the Thais had a tax break where they could have assets outside of Thailand. If they got a gain or whatever, wait a year, then they could bring that money back in now. That's no longer valid. As well as now, Thailand knows where all this money is and how much it is and who's holding it. So now going forward, they don't have that loophole anymore for the gains, bringing them back to Thailand, and they're subject to the new rules that have been, or the new translation of the rules now for them.
Now this works, remember I said the OECD earlier, because again, they're trying to get every bit of money tracked around the world flowing into a database that flows to the individual tax authorities. So if a guy in France is tax resident there, and he comes over here and he opens an account for 12 or 15 million baht, but he doesn't tell the French government, but he's tax resident in the French government will find out that that account exists, find out how much interest is, and can penalize him in France now for an account here. That's the reason all this is being done, is literally to make sure the money is tracked and taxed in its appropriate locations. Okay, so we've got Thai tax rates.
So we address this with a lot of expats. They're very concerned. They're moving here. Everybody's deciding whether they will still move here. And we've just broken down the actual tax rates of what they would pay given how much money they bring into Thailand. For some of them, a lot of people are, it really will not work out to be as much money as they think, what they're scared they're going to have to pay. So these are the rates that they would pay for bringing.
One of the common things you'll hear among expats, Farangs, is, oh my God, this tax system, I'm going to move out of Thailand, blah, blah, because especially if it goes to a global taxation system. Now, first off, most of the rest of the world has a global tax system. You hit 180 days, you're taxed upon your global income. Thailand is moving towards the standard, not away from it. There are a few countries, Vietnam is still using a remittance basis taxation system, but very, very few countries do this. In fact, up until recently, it was possible to just, effectively, the Thai revenue authorities weren't processing these guys for any type of tax whatsoever. So you could live here free of tax, you could still use the double tax agreements, and you could escape a large amount of tax. But these guys are coming in from Europe. When you look at these tax brackets versus Europe, they're all much, much higher in Europe. They come over here and they move and they plan their assets, which is where Ken comes into, and move themselves around the globe. The assets can be placed in a situation of where they're in lower tax situations than they are back in Europe. So as much as this seems, it's much lower than Europe, and in most brackets it's actually lower than in the United States to this. So the higher taxpayers we're talking about, it's 37.5% for the highest tax rate in the United States, plus state taxation of up to about 10%. So you can be paying 47% on tax in the United States. It maxes out to 35% here with this. Current highest tax rate in the UK is 45% versus 35%. So even if they move over here and they are fully subject to this because they have not done any planning, their tax rates are going to be lower than they are in Europe or the United States or Australia or New Zealand to this, in a large part. So they're still saving money, they're just not free of tax. Most of this for a lot of these guys are going to be literally filling out the tax forms to it, which unfortunately they don't have any rules and regulations or procedures yet, which is an upcoming thing with this.
But I don't know if you addressed this, but they have said that they're going to, I know now that Thais can file taxes online, and that they're going to make that a Thai English, whatever, yeah.
I have mucked up this.
So you can make up to $50,000 and not pay tax?
These are baht, yeah, so
Baht.
50,000.
150 would be $50,000 more or less, right?
No, 150,000 baht would be about a little bit over $4,500, 4,500 USD. That's in Thai baht, not in USD. Yeah.
I thought you divide by a third, 150,000.
Okay, so now I can.
Okay, that was wrong.
Okay.
Too good to be true.
And immigration requirements, 62K. At 780K baht, you've got a little different stuff with this.
And we're talking about people concerned about, buying assets, if you're buying houses and things like that. If you buy a house, currently those funds are usually earmarked when they come in to buy a house. And then you pay taxes on that, if you buy a house and things like that, as well as something that's for your, for your retirement account. So I think there's going to be, those funds that are being held for retirement are, may or may not be for taxation, but still doubles the workup that they were showing, bringing in $65,000 per month for retirement, what that would look like.
And now we're going to double tax agreements. And this is where this becomes really, really important. Now I'm going to jump a little bit ahead of this and talk about these guys' assets as they come into taxation. Now some of the elite visas have the ability to just say, no, they're free of Thai taxation. Hey, that's grand. But oddly, when they sign that particular type of visa for an elite visa, they have the advantage that they're not taxed here. But when the situation says that Thailand only has the rights to tax the income here, do this, there are particular situations where the tax treaty will say that the other country does not have the ability to tax income on this. Very specifically to this, we're talking about U.S. private pensions, American private pensions when they live over here. Okay, so if they go and they were to get an elite visa on this, it still has that caveat that says not taxable here in Thailand. They're still able to use the United States-Thailand tax treaty that goes back to the U.S. Now, this is very important because when their retirement income is, say, $75,000 to $100,000, the tax treaty says that only Thailand has the right to tax that pension. Not a tax credit, only Thailand has the right to tax that pension. So they can pull that retirement income out of the United States free of tax, move it over into here using the elite visa system that Siam Legal is able to create, and with that free of tax, and guess what? Using the tax treaty, they pay no income tax on that money either in the United States or here. It does not work for government pensions and Social Security, but it does work for the vast array of the private pension system in the United States with this.
Thomas, elite is taxed. No, they're saying it is.
What?
They're saying it is taxed. It's only the LTV, yeah.
Oh, okay. So the caveats with this. Sorry. Any public reaction? Okay. I talked about FATCA earlier and how that was passed many years ago. Okay. And this is how complex this stuff is. Thailand has delayed the reporting just recently on their FATCA reporting to the United States. This was passed 13 years ago. They're still trying to get this in place. This is part of the reason why I think Thailand has to push this out, is because just that one step 13 years ago is still not being processed properly. This is a big, big deal of trying to get the mechanics of this to work out. Like I said, I believe it's going to be delayed. Okay. One of the ways of getting around this that everyone's talking about is the remittance issue into the U.S. So from what we've been able to read on our rules, when Thailand changed this rule, they have not changed the gift tax rules. Okay, so theoretically, if I'm married to a Thai spouse and I have the ability to gift my Thai spouse 20,000 or 20 million baht, I could move that money from an overseas account as a gift to my Thai spouse, and my Thai spouse is then free of taxation as it's a gift rather than income to her. This is sort of the big way of buying a house or a structure or a car. Move your money into your Thai spouse that allows them to live off of and pay expenses. It's a gift and it's free of the international income tax because they're receiving it as a gift. To me, this is a very large loophole that they may change in the future. But from our contact with the Revenue Department, the gentleman over here is shaking his head, yes, this seems to be the way to get around this in a particular way. Okay, exempt gift categories.
The other part of that is that if they're not a relative, they're allowed to give 10 million. To a non-relative, they're able to gift them 10 million. So a Thai resident, a Thai national can receive as a gift of $10 million from a non-relative. A relative, they're allowed to receive in total $20 million gift per year.
Now, one of the things about we get a question on a regular basis is, I'm going to wire this to the car dealership from my UK account and get around the tax reporting this way through this. Yeah, no, that because a gift has to be given without any type of consequences or remuneration received. So if you're buying a car, you're not going to gift the car dealership 4 million baht and get a car in returns. That will be a taxable event to you. Okay, now we're going to go through one other DTA agreement here that's really, really key to this. Okay, for foreigners. And anybody with an elite visa or any type of international income on this, and this includes Thais. Okay, one of the grand things about DTA agreements is there's currently, I believe, 64 to 66 Thai tax treaties around the world with this. One of the Thai tax treaties that's very heavily powerful is the Hong Kong Thailand tax treaty. Okay, this is about to become a very, very large issue to this and very, very fast amongst the elite here in Thailand. The reason of this is very specific. The Hong Kong pension portion of the Thai-Hong Kong tax treaty says that only Hong Kong has the rights to tax that pension. Okay, only Hong Kong has that. So any distributions that come out of that pension into Thailand will be free of Thai tax. under these agreements, okay? Now here's the kicker to this. Hong Kong does not tax pension distributions for non-residents of Hong Kong. So if you're not residing in Hong Kong, you're living here in Thailand, but you move your international funds through that Thai pension system, through the Hong Kong pension system, it's the loophole that would allow these people to bring in money. Right now, the most secure way to move your money free or minimize your taxation is through some of these structures using the DTA. Because when you start looking at the double tax agreements for all these various countries, again, some things are going to be taxed, some things are not going to be taxed, and some things will be taxed in countries, some will give a tax credit. For the Australians, their pension system is only taxable in Australia, not taxable here. For the Germans, it's a tax credit system. Yes, it'll be taxed in Germany and here, but it will not. But they will have to give tax credit back to Germany with this. Also, when this is done, there's going to be a large amount of paperwork done, even on whatever type of system they have. They're going to have to report all of this, even if it will be free of tax by the double tax agreements, and make a statement to the Thai revenue authorities that this will be taxable. This is not taxable for this reason using this part of the tax rate. Reportable, but not taxed in those situations with it. Now, one of the advantages of my particular firm, we are the largest basically international firm with experience in tax treaties in Southeast Asia, much less Thailand with this. We have several thousand clients now. We are already getting booked up for appointments for next year to get appointments for these people. If you know anybody who's interested in this, call us now and get appointments, because we're the experts in dealing with the Thai Revenue Authority on tax credits. We're also the first firm ever to get corporate tax credits back for taxes paid in the United States. The complexity of this, especially in this first year when they implement this, is not going to be fun, because the Thai Revenue Authorities are learning this as they go with this. And so far, they don't know it yet, because again, we're still working on one tax credit with this. Yeah,
so some of our American clients who we have basically we recruit, they recruit accounting majors from this different colleges around, bring them in as interns, and then we'll keep the ones that stick, which is basically most of them, will pick up on the American taxes and come and join Thomas's team, which is almost 30 individuals we have working doing taxes.
The vast majority is Thai. My staff is Thai.
And maybe 2 other American tax agents are in the office as well. We also have, he has six individuals that do Thai taxes for us. So some of our American clients own businesses, and we accommodate them by doing their Thai taxes as well, and so can accommodate some of these other issues, and we're familiar with that kind of stuff.
There's going to be a couple areas in this. One is planning. Planning for individuals is going to be key. Reading the tax treaty, consulting with an expert, figuring out what their tax liability could or may be. Because we have 2 separate flavors of this right now. One is the flavor of the money, or the remittance basis that comes in Thailand. That's where it's right at now. And in a way, and the next one is global taxation, okay? Because in September of last year, they announced they moved from the old system where the outside more than 1 year. Then they moved to a new system where the money, what's remitted into Thailand is taxable in Thailand, no matter how long it's out. But now, the last announcement is that they're going to move to global taxation. Global taxation means whether you brought that money into Thailand or not. So we're in a huge transition period, but that means planning is best to look at this as a global taxation and begin to figure out how these guys' assets operate globally, because that's where the system is moving to, like everywhere else in the world.
So the issues we were having with Americans were that when Americans move outside the United States, the American financial institutions were closing their bank accounts, retirement accounts. I mean, not just like even 100,000, millions of dollars, saying, hey, take your money, because we don't want to be responsible for all the reporting they have to do, which is basically what's called a KYC, know your client requirement. So due to what Thomas, working with business class age, who I work with, we came up with a lot of solutions for Americans, and now those same solutions kind of working for all the expats now. So when he says the Hong Kong pension, we have a Hong Kong pension as well as a Guernsey pension. Now, it doesn't mean that your assets are held in Hong Kong, it just means they're held through Hong Kong, okay? Through the agreement, your assets can be held in different areas and subject to regulations and very strict regulations where they're held in investment platforms. But these solutions for Americans, again, what we talked about with federal pensions for Americans are taxable, remain taxable in the United States, and as well as their distribution. So those can only be taxed in the United States. They cannot be taxed in Thailand. But the private pensions are taxable in Thailand. Actually, before January the 1st, Thailand was not taxing them. So you might see a lot of individuals that are dual national, they may be a American or something with a Thai spouse. You know, they saw all the difficulties the Americans have dealing back with their home country with these financial institutions, especially without time zone, the middle of the night calling back. So these have already been very popular for them to accommodate them having their assets closer to home. And the Thai community is more comfortable, feel more comfortable with Hong Kong as well as Guernsey and those regulations. There are also tax benefits, so they're able to access those funds in a private pension to take them out without incurring any tax issues in the United States. Going forward, if they open a pension through outside of the United States, then going forward, they could have the same investments back in the United States, but going forward, those Americans will not have any taxation going forward. So very beneficial for that. It also works for all of my colleagues are British. I'm the only American that works there, but we also accommodate all nationalities. But everyone else is from the UK, and now they've always been faced with a big issue of being domiciled or not, really being recognized as living outside the country, meaning that they would would avoid any kind of what's called IHT taxation upon their death. As Americans, we're taxed when we're alive. The British are taxed when they die. So then in some cases, if they haven't done the planning up front, they're faced with a lot of issues with their family. For example, if they were to have a big estate, and that's taxed, they have to pay that 40% or whatever tax before, would have access to the assets, which has to be done, I think, within 6 months. So the domicile thing, too, has just been changed from 5 years to 15 years, and they've just had a government change. So the taxation rules never get better, so planning is key to all of this. And
let me give one more example of that, okay? Back in there was a cycle when England left the EU, okay? The pound goes down. It was a big bargain for Thais to go in and buy property in the UK. Literally half off from the Thai baht price with this. Okay. Now, so the gentleman comes in and he goes, I can buy a property for £1.5 million in London now. Goes and buys a property for £1.5 million. He buys that property, and the next week he passes away. 40% of the value of that property is due as an estate tax that has to be paid within 6 months on this thing. Okay. Now, proper planning, which should be coming into place, is before they ever buy the property, they go and they buy the property as an investment through an overseas pension. That pension is qualified, it's called a QNUPS, Qualified Overseas Pension Program to this. There's no estate tax. The pension owns the property, and the pension is an ongoing thing. Planning on international income is becoming crucial now, because now you've got the problem too that they're also domiciled in Thailand, and as Thailand starts increasing its state taxation to gain more revenue among the wealthy people, you're going to have a problem, because that asset has taxed here and taxed there. Who taxes the asset? When is the asset taxed? All of these things come into play. So, Ken and I do these things on a regular basis all over Southeast Asia to this, but one of the biggest reasons we do this together is it's kind of two sides of the same coin. We handle the tax planning and very specifically on making sure the structures work. Ken actually he works for a trust company that handles opening the accounts, setting up the pensions, setting up the different trust structures so that people don't get burnt. Because I always ask one question to see if anybody knows the answer. What's the difference between an old style clock and a meat grinder? Anybody know the answer? Okay. And a clock, all the gears mesh up. You show up for dinner, you got your steak dinner perfectly good. In a meat grinder, the gears are slightly off center. So when your steak comes through, you get this mush at the end of it. If you don't plan international taxation properly, you're in the meat grinder situation, and your family's going to come out with a pile of mush at the end that's not going to be as good as the steak. Planning on all of this, even though there's a lot of rules that have to be written here and everything, is going to be really good. Because one thing they have stated very specifically is that they're going to adhere to the terms of double tax agreements with this. So if somebody's got assets somewhere in the globe, they need to come talk to us. They can come through Siam Legal specifically as well. And then they get referred to the whole team here, and we can sit there and help them plan a way that minimizes this issue to this, because they don't want to be in the meat grinder.
To visit us here at 2 Pacific Place, next to Landmark Hotel in Bangkok. We also have a satellite office in Pattaya. Thomas has an office in the Philippines, in Hong Kong, and also.
We also do, if you guys ever want to do a custom individual, one of our interview, we can do an individual YouTube video. Our hits so far on this are close to 200,000 hits. These are really, really popular YouTube videos when this is talked about on a one-on-one basis with us.
So if you guys have any questions at all for us, it's a lot of detailed information. We're also, we should have something prepared as well with a pamphlet just explaining each nationality, how they're going to be taxed.
We're working on a sort of a common language breakdown of what these tax treaties will say. So that can go out and, they'll sign it to our site, send their information, and we'll be able to send that out. This is coming being worked on right now. Any questions? Thank you for not passing out. This is rather complex. We do have a tax law question. This is not going to be easy.
As an international tax lawyer, I'm just wondering if the American has a policy of double non-taxation, which the OECD is trying to put forward, because it might apply to the case where the US has, only Thailand has a right to tax pension. There's taxes in Thailand.
Okay. As a matter of law, okay, yes, the U.S. has codified into its own law double taxation. Again, tax credits for foreign income, taxes paid on foreign income, okay? To be specific with that, so any income earned anywhere in the world where there are not economic sanctions against, Myanmar, Cuba, Russia would be exceptions to this, with it, where there's not, has codified in law that they will honor the taxes paid in another country. I'm not sure, does Thailand have that where the taxes are paid, or is this straight by DTA, where if the income is owned overseas, that they have to do a tax credit, or is it case by case basis by the tax jury? We're going to discuss that later on. But that's codified in the law. Now, from a U.S. standpoint and most other nations, when the tax treaties are done, it will specifically override local law to this. So the tax treaty itself is passed by the U.S. Congress in the United States as an example, and then signed by the President of the United States, and it will override local law up to that point with it. So yes, it's very specifically codified in the law, as in most nations with this. And that's the reason why, without going in and renegotiating or changing those tax treaties, they really had to honor those particular tax treaties. Because most tax treaties of this are dealt with because of international businesses. Money's flowing around the world, and there's corporations in billions and billions of baht every hour to this, and where it is tax and flows. Up until just recently, those weren't really being used from an individual standpoint. Yeah, that's changing fast with us. We do a lot of Patty City Expat Club, Chiang Mai Expat Club, or speaker on a regular basis. When I go speak as an American there, 1/3 of the room would pay attention, 2/3 wouldn't. Now I'm the most popular speaker in these organizations, and every time they announce where we're going to speak, the population in the meetings doubles or triples with this. If you're trying to do media on this, guys, this is a huge topic. You get a lot of viewers on this particular subject with it. It's huge to this. But yeah, it's codified into law in most nations with this. Same situation. It'll override local law. Any other questions? You guys did really well. This stuff is dry as hell. Congratulations.
So you're gonna move to Thailand now?
Free, your IRAs and 401ks free of tax. Yeah, free of tax.
So if you have a retirement plan, do you have any 401ks or IRAs?
I have an IRA.
If you moved here for the tax year, you can take all your money out of your 401k IRA without paying any taxes.
And
So
move
in
back to
terms
the
of-
US, it's free tax.
So in terms of succession of assets, you would have avoided 30% tax passable to your beneficiaries. So you'd be able to have more control over that going forward if you open a pension outside of the U.S. Because of the tax treaty. Those funds would no longer be taxed, invested in the same investments back in the United States.
Oh, all right.
So it's a lot of strategy. That's why we come here. When I first moved here, it was really strange, because the United States has tax treaties with most countries, but in most countries, the wording is a little different than it is in Thailand. This one is unique. So
Each tax treaty between two countries is a negotiated contract, so to speak, and each one has very specific issues that are unique to each tax treaty. And it's if you ever look at one of these things, they're not joyous reading. It is very, very technical.
one last thing is that these laws are geared towards I think the high income Thais as well. So not just elite visa holders, but the high elite Thais that here that have a lot of assets outside of Thailand. Because so they're trying to catch that. It's not directed, I think, towards expats. It's a great place to live. Thomas and I have lived here. Thomas has been here almost 10 years, and we're very happy. The Thai people are very friendly and very loving, and a great place to live, very cost effective as well. But don't avoid moving to Thailand because of the tax laws. You're probably still getting a tax break, but planning will be the key. So meet with someone, you get a free consultation through Siam Legal as well as Jett, and we'll set something up.
Again, my conversation yesterday with one of the larger banks, their legal team, was over not minimizing Thai taxation, was minimizing UK taxation on Thailand real estate there. So every type of investment needs to be reviewed by a qualified international tax specialist every time, because otherwise, again, you end up in the meat grinder. You don't want to be there. You don't want to lose huge percentages of your money because you make a simple mistake that could be alleviated.
Well, and just because you mentioned the United States, like, I have to take out about 200,000 every year in taxes.
You require distribution,
If you were
required, you don't avoid that.
Yeah.
Well,
you still have to do the R&D. You have to do the
Yeah.
R&D, but
Yeah.
that would be free of tax here. It'd be free of tax.
Yeah,
You should be
oh, okay.
That'd be about
Ken is my brother, so
$200,000. You'd be paying about 38% tax.
you can give
about an
$17,000
$80,000
a
tax
year,
savings living
tax
here
free to Ken,
versus in the
17,000.
US.
How much is 17,700? You can gift anybody 17,000.
And it doesn't hurt your.
It's state tax exemption.
Yeah.
We actually talked to Ken yesterday and said you should talk to us. But this is what we do, guys. We're growing very, very quickly. We're up 50% per year, just based on our Thailand operation. We are, again, by far the largest firm doing this, and our growth is exponential. We will go from 28 to 30 people here to probably 50 to 60 within the next 12 months. That's kind of growth of this. A huge portion of that will be doing the Thai compliance. Again, I'm skeptical they're going to be able to get this done this year with it, but I know they're trying, but I think they're going to have to delay this by the year.
I think
That's an opinion.
We don't agree because I think they need that 10,000, and they've told us January 1st. They may not be prepared to do it, but we will be. They will start.
If they do this and they start doing the reporting in January, chaos.
Yeah.
Get an appointment early.
What do you think, Jett? You think they're going to get it done?
Again, if I hadn't had this one client close to 18 months now of them trying to process this thing, and say, yeah, it might work, but they can't even get that thing done for 2022. But that's what the year we're still working on now.
The U.S. knows how to take their money quick.
Yeah, it's all automatic in the U.S.
It's
All automatic in the U.S.
And you guys
They're
are
wrong.
Siam Legal. You guys are
The U.S., the Internal Revenue Service in the U.S., especially during COVID, could best be described as non-functional. I'm not in any way putting the Thai authorities down on this thing. The IRS in the U.S. is the best word. Completely dysfunctional would be a compliment for these guys with us. We deal with these guys all the time internationally and stuff. They are not easy. What the Thais are trying to do here in the Thai Revenue Department, I don't think the minister who came in and proposed this knew how big of a deal this is going to be. It is a massive, massive change to how it's done. And that massive of a change doesn't take making a decree. It takes years of writing regulations and writing procedures that go along with this. And again, let me show the earlier slide. The Thailand is having to delay reporting back to FATCA reporting in the U.S. And that process has been trying to go ongoing for 13 years. This is a bigger change for Thailand than to, it's a complete reform of international taxation, and it's a rough job.
A big part too is the Thai American. You know, we have a lot of bycatch Thais dual nationals that have an issue. They haven't been reporting really American taxes. They may have been 15, now they're getting of age, or maybe they just haven't reported for a number of years. Thomas can easily get them caught up, you know, and you know, with doing reporting just for the last 3 years. But it's important like that because, again, there's if they haven't been reporting these accounts as an American, they can actually get fined for the money they have, and the states will go after that money, especially if they feel like they're hiding it. If they feel like they're hiding it, they can take up to 50% of the money you have.
It's criminal as well.
Yeah.
Thailand several years ago signed what's called a bilateral information sharing agreement, which means if there are non-disclosed accounts here in Thailand and the U.S. so deems it to be criminal, a federal marshal meets them at the airport and they fly back to the U.S. in handcuffs and go and straight into federal court in New York City. And the number of times they're doing that is increasing every single day because they're detecting more of these accounts out overseas. Mm-hmm. And you know, they prosecuted one lady who was 87, who had received the money from her father, who was a Holocaust survivor, and he placed it in a Swiss account, and told her, never tell anybody about this account for security, having gone through the Holocaust with it. They prosecuted this lady and are putting her in prison for non-disclosure of that account. Yeah, and it's just, you know, it was a thing that she was told to do from a young age, to never mention this account. Now, with several $1 million, so I don't think this is going to happen to somebody who's 500 baht, but you know, the information moving around the world on where these accounts are is a big deal. And now, Thailand's carrot on this, folks, is pretty simple. Okay, you got a lot of wealthy Thais who were not hiding money, but keeping money in U.S. bank accounts. Again, biggest bank secrecy country in the world. Now, guess what? The Thai government knows where that money is and is able to go after it using subpoenas and all these kind of things with it. So, you know, this is an especially powerful tool in anti-corruption as well. So, if they were, you know, somebody had stolen, you know, 30 or 40 billion baht, which is entirely plausible for a corrupt official, guess what? That money is now being able to be identified as them as the individual owner of it, and Thailand can go after it and get that money repatriated back to Thailand. So this isn't even just about tax, it's about stolen money as well. So you know, when I was going through law school at the particular time, FATCA passed in 2011, and when my professors came into class, he was a very brilliant gentleman, only passed about a week beforehand, and he said the nuclear bomb has just gone off and bank secrecy is dead to this. He was the first person I'd ever heard use that term, but that's exactly what's happening.
The other things keep popping in my mind. The other thing that we deal with, this Thailand-United States tax treaty is not only for Americans and Thais. Okay, so any nationality that lives in Thailand and they may have worked for a U.S. company or have a pension or assets held in the U.S., they were able to actually liquidate their retirement plan as well and avoid paying the 30% tax they normally would pay in the U.S. So a British person there, or even a Thai, like I have a new Thai client, she worked in the U.S. She actually doesn't have she didn't get a passport, but she had a green card. If you get a green card in the U.S., it's just like getting a passport. You're taxed. You're obligated to tax. It's worse because you don't have a passport, but you still have the same obligation for taxes. So this young lady has moved back here now, but she has a pension. She can move that private pension out without paying taxes. And now, because she worked there a number of years, she's going to be getting paid Social Security. So because she still has a green card, that remains taxable only in the United States, which probably will be taxed at zero because of the pension is no longer taxable. Even though she's tied with a green card, she's not subject to Thai taxes, bringing that $2,000 in a month from that government retirement plan.
One of the other issues that comes up on a regular basis too is international expat with a Thai spouse. Now, the Thai spouse may or may not have a level of economic sophistication on this, and especially when they're not economically sophisticated, coming in from the countryside, they may end up inheriting $2-3 million US at times, especially with somebody who's on a leave visa. Now, in the United States or most other countries, you would use a trust structure where the money goes into asset managers and the funds are sent into the spouse at very specific things to ensure that she has a lifetime income. Thailand has no trust structure, which means the money is brought into Thailand as an inheritance. It's free will immediately, and in many cases, relatives or others will prey on this poor lady who has no sophistication and promise to send her money back, and she will be broke within about 36 months, and these people never pay her back. One of the big advantages of this, especially like a Hong Kong pension, is upon death, this can convert to a trust where the money goes out to the spouse at a very specific thing to this. And exceptions can be written into this. Medical bills, university, purchasing a house, purchasing a car, that money can be controlled from beyond the grave by the person who wants to do it. And again, it's also tax efficient as well. So I mean, it's a huge issue, and we have a lot of our clients who have married Thai wives. I am incredibly lucky. My Thai wife has a U.S. master's degree, a UK master's degree, and a Thai law degree. She's an exceptionally educated woman to this. But I don't have to worry about this, but a huge number of my clients do. They've married somebody, again, who may not be economically sophisticated. One of their wishes is, how do I protect that spouse? There are ways by using this that allows that to occur as well. The money has to be held outside Thailand, but it's all able to flow through as well. This is a very large ball of different regulations and rules and wants and planning that all comes into play.
So back to the foreign income thing. So it seems like everything is just a wait and see situation until the authorities actually figure all this out. And you're of the opinion it's going to take years. So in your opinion, what does an expat do? He just proceeds as normal, just live his life as normal.
Up until the end of last year, the advice I gave was pull as much money into Thailand as you can to live for a couple of years with this. Okay, and a large amount of our client base moved much more money in bulk before they would come into it. Okay, right now, and you're correct, there are far more unanswered questions than there are answered. The documentation on this has been a few paragraphs they've released on this, and again, the secondary side of this is going to move to global taxation.
That's why I've always been reluctant to hop on this trend and do any content about it, because there's so much vagary. There's more vagaries than there's actually
except in the one example of double tax agreements.
Yeah.
That's where you can go in by country, and we can talk about different things with it.
Yeah, maybe we can do that.
And these things get tens of thousands of hits. I mean, when we do these, they are literally the #1 YouTube videos. We've done Chocolate Man, Foreigner Joe, 3 or 4 others as well. It's about 200,000 hits. There's demand for this information to this. And the double tax agreement really is going to give them a lot of knowledge on what they want to do country by country with this. It really is a good way to talk about this and give them, because they have to adhere to the double tax.
And that's I think that the tax agreements, give a lot of definition of what is going to happen for this nationality, that one. For Americans, I think for the most part, it's pretty clear what they're gonna do, as well as in some cases with the British and some of these that we're talking about, most of them have tax agreements. Some of them I hear are under negotiation as well. I don't remember which one, right? But you know, the tax treaties are pretty clear about what's gonna be taxed. It's just that Thailand wasn't taxing it, you know, for the Americans. You know, they were bringing money in, not really collecting the money. But now they're saying, okay, well, that loophole is done, we haven't collected it. And then also, all the money you had before January the 1st, we're not gonna tax it, bring it in. I did hear, like, you know, you've heard them say that starting January 1st, they're gonna start doing that. So the assets you have for that, just wanna keep some statements from December of 2023 to show your assets where you might be moving them out of those, you know, where they're located into Thailand to prove that, hey, I had those assets before January the 1st, and I'm just moving them in, they should not be taxed.
Secondarily to this, we focus down on the expat market on this, although we actually have a Thai staff that's going to start doing some videos on this in Thai as well, because this isn't just affecting expats here. This is a reformation of the entire Thai tax system international. If Thai families have assets or their kid has gotten residency in another country for university purposes or has moved there, assets are moving back and forth. This is a huge Thai issue as well to this, which has never been focused on these guys at all. And it to the point where, again, when we talked to one of the banks about their U.S. clients, we handle all our U.S. clients already. They said to me, and I quote, our biggest issue right now is UK properties held by Thais. It's billions and billions of baht of UK properties held by Thais there. This is a problem that shouldn't be just addressed in English for expats. It needs to be done in Thai as well, because that information is probably sparser for the Thais who have assets overseas, because the expats here are already concerned about it. A lot of the Thais aren't even aware that this is an issue that's a coming storm on how they're bringing income, unless they're very, very wealthy. And we've had those families come in and talk to us as well. My title is American National Tax Advisors. We handle the international side as well, very specific.
And there's some brochures you can do. I'll send them to you. I'm sure you probably have the revenue one about the gifting. You know, it's a brochure about that, and you know that's.
I think that would be especially helpful because most of the content I've seen online is just a bunch of conversations back and forth with no bullet point or any flow chart or anyone. It's just a mess.
I can literally set my one of my tax teams, Tosh, she's got a degree from Queen's Mary University Law School out of UK. We can customize anything you want to as far as a presentation. You want hard slides and stuff, she'll generate the hard slides for you.
Yeah, but I'll see that revenue thing. I've translated to English, but given where we are, no disrespect, because there's a lot of income that comes to Thailand to different people, different individuals as gifts. You know what I mean? So I think that that just seeing that from them in writing is always a good thing.
I think that's going to be the first loophole they close now.
All you gotta do is walk around the corner, and I don't think they can do it. You know what I mean? So you understand what I'm saying? Like as much money that comes in this one block, how much this comes into the economy fed through this way, from different individuals. I think it'd be, I don't know.
But I think the 20 million baht is
maybe they can change the 20 million.
Going to move to $1 million baht or so. It's not a loophole you can drive a ship through, but you could drive a car pretty easily through a 20 million baht loophole on taxation, which is probably about the most people would want to try.
And the thing you might mention with the gifting, you can't gift your wife 10 million and then she transfers it to you. You know what I mean? So she can't really do that, and she can take the cash out and keep it at the house. But they're going to be able to track that this is not a legitimate gift. That you got this money, you send it somewhere else. So it's not going to be that kind of. You're not going to be able to gift somebody, a non-relative money, and then they just send it to you.
The number one question they get all the time is, what happens if I just live off my ATM card and my credit card? Here are two of those. Okay. Now.
Yeah, because you can get a Schwab account.
Get a Schwab account, live on your credit card, bring the money into it. Okay. Currently, there's no rules and regulations against that in Thailand on doing that, and no reporting regime to do that. Okay. However, and part of my degree is anti-money laundering. If you are doing that in a way that you are specifically doing to avoid taxes, the general term is called structuring for money laundering purposes, and you are violating tax codes because you're avoiding reporting by doing that with it. So now, while that would work for right now, because the Thais obviously don't have the infrastructure in place to put that in place, that loophole is going to close at some point in the future. My speculation of it is at some point in the future they say, this ATM card or credit card has been used for more than 6 months here in Thailand. It's bringing money into Thailand, and all they do is they just lock it out of the banking system here in Thailand. So, I do not recommend people pushing their lifestyle to try to do that. Most of this is going to be just, for most of these guys anyway, it's going to be a reporting issue, especially if they're coming out of Europe. The European rates are higher here than here, so it's just going to be a tax return. Now what we're doing is we have a team devoted to doing Thai tax returns for expats. We're shooting for a $400 US dollar cost with it. That may go up or down depending upon the actual difficulty of doing this and the difficulty of the return. But the average expat on fairly basic income who's coming in here should be around $400 US dollars, 45,000 baht to do a Thai tax return with it. But that could change dramatically depending upon how much chaos and how much time is in the system.
Are you familiar with Schwab? Maybe you've ever dealt with them? Okay, so that's one of the few banks that's not going to jam you up, Schwab, all of them though, as soon as you say you live outside the country, first of all, we advise them, if you keep the US address, you better keep it, because as soon as they, if you change it, or if they recognize that you're outside the country, because they are trying to follow those KYC requirements to know where you're playing. As soon as they see that, you no longer can advise on your account. Morgan Stanley, bank, whatever you have, you cannot advise on it anymore.
When facts have swept through the globe, the banks and financial institutions around the world started going, it's not worth having an American as a client when you're over here. So a lot of banks and financial institutions ran away from U.S. clients, American clients of this. As common reporting standard gets deeper and deeper into the trenches of this, the banks are all doing the same thing. Oh man, we got to report this back to Canada. Just don't have any more Canadian clients with this. So one of the advantages, and again, the reason Ken was brought in to work with me specifically for a company, 2 separate companies, by the way, to this though, is because his firm is running towards this market of expats having to move money around the world. It sounds like that doesn't sound like that big of a deal. You're competing against anti-money laundering rules, common reporting standard rules, FATCA rules. The rules and regulations this firm has to go through are an encyclopedia book to have an account for different nationalities of it. So that's the reason why his area of specialty, especially dealing with expats financially, is very, very rare.
Well, that's the only American there working with Thomas. We have some solutions for Americans. I can help you open an account in the United States, outside of the States, outside of Thailand as well, bank accounts, and also pension accounts. So all those things is our expertise. If you come with that, we can help you with all. I can help you with all that stuff. So.
Any other questions, concerns? Thank you guys for coming.
Thanks a lot.
Thank you.